This is Shannon Ray Davis, and you are listening to Omega Man Radio. Welcome to my world, the world of the Omega Man. Join us here for the nightly marathon, broadcasting Monday through Friday, 6 p.m. to 1 a.m. Eastern. You can find us here on YouTube, and we encourage you to report for duty. Get trained up. War of the Saints is coming. You want to be an overcomer and endure till the end. We will teach you how. We cast out devils. We command healing to the sick in Jesus' name. And we preach the full gospel of Jesus Christ to win souls for Jesus. I want to encourage you right now to subscribe right here on YouTube to this channel, smash the like button, and share a link to our live chat room to everyone you know right there on Facebook. Get them to come on out and tune in and join in the fight against the host of hell. If you'd like to support this work financially, we have a PayPal button on our website. We have GoFundMe, Zelle, even take Bitcoin. And we thank you in advance for partnering with us. Our website is OmegaManRadio.com. One more thing before we start tonight's show. To the demons tuning in, we're coming for you, demon. No demon is safe. Okay, everybody. More of that song later. That's a great song with some Christian lyrics. Okay. We are set up. I just went ahead and posted the Zoom link for you in MixLR. If you want to join us, you can join live right now. Also, we've got the link put up on Facebook, so encourage you all to join us tonight. We've got Tom Mack in the house. Hang on a second, Brother Tom. I screwed something up.
Uh-oh.
I just got to turn the share screen back on. Try it again, brother. Share your screen.
Okay.
Okay, there you are. We got share screen back. Great. Okay. Well, we're ready to roll tonight. Welcome aboard, everybody. And my brother, you want to open us up in prayer?
Yes. Heavenly Father, in the name of Yahushua HaMashiach, we just come before you tonight. And we want to bring forth something that I believe is your provision, our way of escape in these end times. For years and years, we've been hearing about the beast system and how nobody can fight the beast. But like usual, Heavenly Father, you found us a way. And private cryptocurrency is that way. But help us tonight to understand this system and to learn how to use it to overcome the beast system that's fast coming. And we just thank you in Yahushua's name. Amen.
Let me just make a quick announcement. This will be a two-part program tonight. We're going to do what we can this hour, and then Tom's going to come back tonight and have the rest of the program to continue. He'll be back at 8 p.m. Pacific, 11 Eastern. Let's jump right into it. Brother Tom, take it away.
Okay. One thing, during the gap when we're not or when you're doing other shows, if people want to ask for me to evaluate a certain cryptocurrency, I follow several hundred already. But if it's one that I can find on the markets, I can probably set it up and evaluate it in the second hour. So if you have some you want, I will do XRP. I will do Monero. I will do Bitcoin. They've all been interesting. But we're going to look at them, and that will be in the second part. In this first part, I'm going to let people see how I came up with a way to evaluate. It's interesting that for years and years, people have been following various markets. And let's look at some of them. And we learn from these people, even though some of them are centuries old, like this first man, a Japanese man by the name of Mushiska Hanma. He was the first person to invent the Japanese candlestick charts. And he developed a trading system back in the 17th, 18th century by dealing with the rice markets. Yes, his system was basically for commodities, but the principles he learned can very well be applied to what we do today. A lot of people consider him a very brilliant man for his time. And you have to remember, he did all of this on paper. He did not have a computer. He did not even have a calculator. Everything he did by hand. And what he used is he used the candlestick, which I still prefer candlestick charts to anything else. And there's two types. When a security goes up for a day, you use a green chart. And also, you'll see that the body of it, let me get my little pen out here. The body of it, right here, that's where most of the trading takes place. And on the top, what they call the wicks, and I'm going to have to get a different color here. This is not working, but the wick on the top and on the bottom are where less of the trading is, but you usually will get a high for the day and you will get a low. But if the security goes down for the day, it'll be red. And again, you'll see wicks for high and wicks for low. And here's how a Japanese candlestick chart looks. And one of the things that's important to understand is that there's no straight lines in any financial market. Things don't go straight up and they don't go straight down. In fact, what Hamna discovered was what he called a morning star. And what did he do? He would mark those morning stars as places where he could get in and invest in more rice. And then when it got up to the top, that's when he'd start selling his rice. And you'll see the first little morning star is sort of a slight drop. But the second morning star, it's a little bit of a bigger drop. And we're going to try a different color here. This one is a little bit bigger drop. And here's another one that's a little bigger. But then on the way down, which is what I'm afraid is happening with XRP, you're having a morning star and an up that's a little deceptive. And so Mr. Hamna taught us a lot, even back a long time ago. I don't know if the man could even conceive of a cryptocurrency in his time. But he's not the only one. Here in the United States, it's interesting that a lot of mathematics started to get studied heavily in the 19th and 20th centuries. I guess you could say England too, because Reverend Bayes' theories came out in the late 1800s, and he was an Anglican minister of all things. And one of the guys that you hear talked about lots, especially among crypto traders, is Richard Wyckoff. Born in 1873, died in 1934. He was a pretty old man when he died. But he was a journalist, but he was also a big-time stock market investor. And I put a picture of his house, which, by the way, he was neighbors to Alfred Sloan, president of General Motors on one side, and the Sinclairs on the other. And in fact, the business school at MIT is named for Alfred Sloan. What he is famous for? When Henry Ford decided and told the public that you could have any color of car you wanted as long as it was black, Alfred Sloan said, I'm not going to buy that. And suddenly his cars came out in something like 16 different colors the first year. And that was into the hundreds in a few. And what happened? Suddenly General Motors is selling cars and Ford isn't. I mean, come on. How many people really want a black, ugly car when they could have some nice color? But Wyckoff, he was just as rich as those guys. And he did it playing the stock market. What did Wyckoff say? That every business goes through 4 cycles. They have an accumulation phase when they're starting out, and when they're at their bottom. And as the stock starts to grow, or as the security starts to grow, it gets marked up. And many times it gets marked up a lot more than its book value. In fact, most stocks are worth many times their book value. And I think the same could be said for crypto. But what are investors looking for? We'll find out in a little while. But he looks at a markup stage. Then we have a distribution phase where it starts to top off, won't go any higher. And then you'll have a markdown phase. And in the markdown phase, that's when the price goes down. When we saw crypto go down to about 28,000, it was in a markdown phase. And then once it got there, it accumulated for a while. Now it's marking up, and we saw 50,000 the other day. And when it got up to 65,000 the last time it distributed, a lot of analysts are saying it's going to push through that 65,000 by the end of the year. I'm not so sure, but that's why I'm sharing with you what other people say besides me. Because while I may have my opinions, I may not be always right, and I might be wrong sometimes. And then the second guy is Charles Dow. And he had some different ideas. He said that the stock market has 3 movements: a big movement, a medium swing, and a short swing. And of course, he had an accumulation phase, same as Wyckoff. But what he is up was a rapid change phase, and distribution was when it went down. That he was very similar with. Well, one thing he always pointed out: financial markets discount all news concerning a stock, which means they're going to know about it before we do. We'll learn about that a little later too. But Dow came up with 3 averages to help measure the market. The Dow Jones Industrial Average, which you hear on every business report. the Dow Jones Transportation Index, which also is used as a bellwether. If the transportation index goes up, according to Dow, the industrial average will follow. And when the market's down, that's when the utilities average will come up. And basically, that's all your electric power companies. If I were to list them, I'd probably get a lot of hisses and boos because nobody likes to pay their power company. Yet everybody likes power. But what happened in 1929? Suddenly, these theories fell apart to a point because of the stock market crash of 1929. And suddenly we have new theories. The most famous one, and the one that I studied in school considerably, was Graham and Dodd's theory. Basically, he said that every stock had a underlying value, plus it had a value for how much earnings it was going to make over the next few years, and they would discount that. I'm not going to go into that. I had whole courses that taught that. But what he didn't do, and what these guys didn't do, is they didn't account for interest rates. And they didn't really do a good job of analyzing the Federal Reserve and how it affects these things. There are other people would have to do that. So I've come up with 4 people who have helped us to understand some of these things. But as I said, by the time the 1980s came around, when the value of personal computing became a part of the world economy, suddenly the stock market went vaulting up there, almost to mock Joseph Granville and his famous sell signal in 1982, when he told all his subscribers to sell everything, that there was going to be a crash. Well, that didn't quite happen. So here we are. We've now got men that are adjusting to this, learning to use their computers, remembering what they learned in finance class and in their math classes. And suddenly we have 4 men. First one is Peter Lynch. He was famous from, well, I'll get to him in a minute here. Marty Zweig and Stan Weinstein. And then on the Christian side, we have Jim McKeever. We'll talk about them a little more. Peter Lynch he's like me. He got an MBA. And he was hired as an intern by Fidelity Investments back in the 70s. And he moved up the company until by 1990, he was the head of the Fidelity Magellan Fund, which is the most powerful mutual fund of its time. Well, he retired, and he was very good. Let's figure out some of the things he said. Number 1, the person who turns over the most rocks wins the game. That means the one who does the most research, looks up the most, in this case, currencies, reads the most white papers. He's the one that's going to win in the long run, because he's going to find something all the other guys are going to miss. Second thing he said, most people have lost money waiting for corrections and anticipating corrections. Basically, He said, don't be doing that. When the correction comes, you'll know it, and you can get out before you're going to get too much damage. And the second thing he said, or the third thing he said is, you want to buy in the second or third inning and get out in the seventh or eighth. For those of you who don't understand baseball, baseball has 9 innings. So if you miss the first couple of innings, you're not going to be out of luck. But by the 7th or 8th inning, that's when you want to really get out, because you've made most of your money. And another thing that he said, and this is something crypto has not understood yet, the typical big winner in the Lynch portfolio generally takes 3 to 10 years or more to play out. So I've taken this advice, and in my portfolio, I have coins or tokens that I know are going to take quite a while to materialize their value. And so I buy them with the understanding that I'm going to leave them sit. If I can stake them, I'm going to stake them so I can get something out of it. And then the last one, in the stock market, the most important organ is the stomach, not the brain. Sometimes your stomach is the one that will make you sick, and you have to be able to deal with it. The next guy on my list is Martin Zweig. And he's famous because on October 16th, 1987, during an airing of Wall Street Week, he predicted the stock market crash that appeared 3 days later. In fact, hopefully we can get this to work. Well, it didn't. It decided it wasn't going to work today. But I have a video of Marty Zweig predicting that very thing. And sure enough, it happened. So, there it is.
Turn volume up on it. I've got video, but no volume. Maybe there's a
I think you got to do something on your end.
No, you got control of it, but is there a volume control on the video at the bottom of the screen or anything that you can see?
No.
Yeah, we're not getting video, but what was the point he was making, that the Black Monday crash was going to happen?
Yes. In fact, he said, I hate to cry fire in a crowded theater. Whoops, something happened here.
Okay, go back to share screen again. I can just see your desktop.
Uh-oh.
If you're just joining us,
okay,
we're doing a presentation on evaluating the cryptocurrency markets. Welcome aboard, YouTube. This will be on YouTube as well. Okay, we're back to your screen with Martin Zweig. You may just want to go to the next slide. I don't think we're going to be able to get volume in time.
Yeah, it's unfortunate.
Okay, back to you, my brother. There you go. Okay, we're back.
And I've got some quotes from Marty Zweig. Actually, I got a bunch of them. He said, in the stock market, as with horse racing, money makes the mare go. Monetary conditions exert an enormous influence on the stock market. Indeed, the monetary climate, primarily the trend in interest rates and Federal Reserve policy, is a dominant factor in determining the stock market's direction. So when the Federal Reserve decides they're going to yank up the interest rates, guess what? It's going to make everybody not going to invest as much because it's costing more for that money to invest with. And since a lot of trading is on margin, when the interest rates go up, the guys can't do as much trading because of the interest rate that they're going to pay. The other thing he said that's very interesting, he said it's been said that the Federal Reserve writes the script for the stock market. And what are their two weapons? The discount rate and reserve requirements. Because the Federal Reserve controls how much the bank has to keep in reserve that they can't loan out. And right now it's at about 10%, which disturbs me. It should be at least 20 to 25%. And the other thing is the Fed has a discount rate, which right now is about 0.5%. Overseas, they're actually in the negative territory, which means you can borrow money and get paid for it, which I never can quite understand. But it's true in Germany, it's true in France, and it's true in a couple other countries as well. Wouldn't you like that, Shannon, be able to borrow money and then get paid for borrowing it?
Hey, that'd be great.
But the biggest quote that Marty Zweig is famous for is never fight the tape. When the market goes up and keeps going up, that's when you buy in and make your money. But when it's going down, don't try to buy in hoping that you can get up. Because he said fighting the tape is an open invitation to disaster. Then finally is another quote he's famous for is, so the shrewd investor going against crowd behavior has two clues near a bear market bottom. First, extraordinary pessimism among the crowd at the bottom. And second, continued skepticism and pessimism during the first sharp rally in the bull market. So basically what Mr. Zweig is saying is when everybody's saying it's going to go down, that should be a check in you. And second, when it starts to go up and everybody's saying, oh, it's not going to last, that's probably a good time that it's going to. So once we understand those two things, and finally the last quote, patience is one of the most valuable attributes in investing. And then the second guy, and this guy, I remember the first time he ever got on Wall Street Week, and they put up on their panel, they had two guys who were conventional traders that traded based upon what the value of the company. And this guy said, you don't need to do any of that at all. You need to follow the tape, and the tape will tell you. And he used a 50-week moving average to determine whether the stock market would go up or whether it would go down. And the panelists were just aghast that somebody could come on there and say that. But the panelists had to eat a little crow because he was right and they were wrong. And he became a favorite guest on there because he was showing them a new way to think about it. And Weinstein's a major influence in how I do things. And I listened very closely because I could see he knew what he was doing. even if the Wall Street Week panelists didn't. However, the third panelist was Martin Zweig, and he knew the guy was right too. And here's some Stan Weinstein's quotes. Buy low, sell high is a cliche, not a blueprint for action. It blinds investors to the professional's approach of buying and selling higher. He says, don't feel bad that you missed the first third of a rise in a security. If you can get in there and get the last 2/3, you're going to make plenty of money. And this one, that's why I didn't say it a minute ago, was because this is the quote you need to remember. Being in touch with all the financial and economic news won't put your investments in the plus column either. In a world of computers and instant communication, the financial markets respond to the latest news long before you read or hear about it in the press. And then the third thing, the market sells on future rather than current earnings. They're already discounting many years out the value of a company. And this one, you got to laugh at. Relying on the advice of Wall Street wunderkinds, the brokers and analysts, won't get you far. The overwhelming evidence is that their advice is inferior to the advice you would get from a set of darts thrown at a stock page. And second quote is equally just as funny. They, the brokers and analysts, go to luncheons where the executives of Fortune 500 companies treat them to chicken Kiev and information about current company performance. You don't have to go more than to a few of these functions to realize that both the chicken and the information being served have been on the warming tables for a long time, which is true. I've been to a few myself, and he's quite right. And he basically says, you can't make money by reading today's fundamentals in the newspaper and acting on that information. That's a prescription for disaster. It's a little draught of poison taken by most novice investors. That's why he says, don't do it on fundamentals, do it on technical approach, which is what we're going to do probably in the second hour, is we're going to look at how to decipher the market's interpretation of all news, and even news we don't know that they know. And all the technical analysis consists of is the study of price and volume relationships to gain an insight into future trends. And finally, his trading rules. Never buy or sell a stock without checking the chart. 2, never buy a stock when good news comes out, especially if the chart shows a significant advance prior to the news release. Number 3, never buy a stock because it appears cheap after getting smashed. When it sells off further, you'll find out that cheap can become far cheaper. Number 4, never buy a stock in a downtrend on a chart. If it's going down, there's probably a reason. And that's number 5. Never hold a stock that is in a downtrend, no matter how low the PE ratio goes. Many weeks later and several points lower, you'll find out why the stock was going lower. Sadly, too true. And then the big Christian advisor, and he died in 93, is Jim McKeever. And he got his start in the world of technology working for IBM in the 1970s. And in the late 70s, he became a Christian and started publishing books and initially on theology. His book, Christians Will Go Through the Tribulation, was considered very shocking when it came out.
I have a copy of that. And you know what? Even when I bought it 15 years ago, there were not a lot of people, and still aren't today, preaching that we're going to go through the tribulation. So this guy was a forerunner. Amazing man. I have that book in my collection. Back to you.
Yeah, I met him a couple of times, and
wow.
And the other thing he did, and you can still get copies of it, The Almighty and the Dollar. You have to go to Amazon. And it's a really, really good book. A lot of the information's outdated. And he was right on with a lot of things. We'll read some of his quotes in a little bit. But his big trouble, well, first off, he had a strategy letter, which was an advisory letter, and he recommended stocks. And 3 years in a row, he battled with Martin Zweig for number one, often beating Zweig, which is quite interesting because Zweig was one of the best. And in fact, Zweig, when he died probably 15 years ago, he had the largest art collection in New York City. And in New York City, a lot of people have art collections. And for him to be at the top, he had a penthouse in a famous building in New York City, and it was full of art. But where Jim McKeever fell apart was he didn't see the 87 crash coming. Hurt his newsletter circulation, and honestly, it hurt a lot of people in 87. And he was guests on Wall Street work, but he wasn't treated very well by the panelists. Only Martin Zweig was civil to him. So it's interesting, Zweig was civil to him, and Zweig was civil to Stan Weinstein. And it's funny, those guys are the ones that do the best job. And then finally, he tried running a mutual fund. But it's hard to run a mutual fund from a ranch in Medford, Oregon. You need direct connections to trading floors in order to really do a mutual fund right. So here's some Jim McKeever quotes. If Satan can convince us that the pressure is from outside ourselves and that we can do nothing about it, he can continually rob us of our peace. Jesus wants us to experience his peace rather than pressure and anxiety. But number two is the one he's famous for. We want to be out of anything that is denominated in fixed amounts of US dollars, such as bonds, large savings accounts, or whole life insurance. And he was one of the first to say that. And a lot of people, a lot of Christians just said he was crazy, but who was right. And then his third quote, some investments that could potentially keep ahead of inflation are real estate, stocks, gold coins, silver coins, commodities, antiques, and other rare items. And I think he would have added cryptocurrency had he known about it. Because back in his day, cryptocurrency was a theory. I first heard about it in a seminar class at the University of South Dakota just before I was getting ready to graduate. And most of us just sort of looked at each other when the professor talked about it and said, yeah, you just can't do that. Well, we were wrong. And one of the things he was constantly asked was whether the U.S. would have a new currency. And his answer is, I think we might have one in the next 10 to 20 years. Well, it proved to be right, because in 1996, 3 years after he died, they changed the $100 bill. And right now, every bill is changed except for ones, fives, and tens. And we also, it's interesting, we don't have $500,000, $10,000, or $100,000 bills, as they were recalled in 1969 by President Nixon. And another quote he's famous for, the key is not to worry about what color a new currency would be or whether it will be convertible to anything, but to have your affairs in such an order that they could change tomorrow to a pink and purple striped currency, and it would not affect your financial position significantly. So we've studied some of these guys. Now I'm going to show you my methodology, and we'll get started with this, but we're what, about 11 minutes from having to go on to the next program, so we'll probably have to do just a little bit here and then go on. Yeah, my father and his family, they were consistent investors in financial markets. I also had an uncle on my mother's side who was an executive for the largest cooperative in the East. And all of them were good to point me in the right directions. My father had me watching Wall Street Week almost from the day it started in 1970. Another cousin, his name was John Mack. He also spent time teaching me a lot about financial markets. And he had a Bachelor of Science degree in agriculture from Cornell University, which is an Ivy League school. Though he was not too much world government. In fact, he despised the idea. I also mentioned some of the teachers. One of them, Mr. Lunan. He was my business teacher in high school. And he taught me a lot about investing. Most of it was real basic stuff because that's all you can teach in high school. And equally as important was my high school economics teacher, Leo Ponzer. He was also a former CIA agent. He was a eccentric teacher, but he really drilled into me the importance of supply and demand and how it affects financial markets. One of my professors in college was Dr. Ken Schimpf. He was a millionaire even before he came to Morningside College. And he was so rich that the college actually had to get after him to cash his paychecks. He didn't really need the money. He just liked teaching students. And it was to my benefit. Another one was Dr. R.L. Johnson, who was my finance teacher at the University of South Dakota. He taught me the importance of understanding the soundness or lack thereof of companies. And then we have the elders. I mentioned Leonardo Fibonacci. He's the father of modern accounting and the discoverer of the Fibonacci sequence, a set of numbers that can be used to analyze human events. He's probably as brilliant a man as you're going to get. Because to think that the whole of accounting comes from one man in Italy, who when he was young went to the Middle East and studied. and brought it back. And again, we talked about Peter Lynch. He said investing should be done on common sense. It's interesting, his number one pick was Dunkin' Donuts. And why did he pick it? Because he went there and liked the donuts. I don't think he ate too many because he was always a very skinny man. Maybe it's the coffee he liked. I do like their coffee.
Best in the world.
Yeah.
In America.
And then I've mentioned Dr. Martin Zweig, because he was the one to meld fundamental investing, technical investing, and the actions, and analyzing the actions of the Federal Reserve, which most guys before that time didn't think to do. And it took a lot of people a long time to understand that a man like him had some wisdom. He was a Jewish man, by the way. And Stan Weinstein, he was the first one to use 50 and 200-day moving averages to determine market trends. Another man is John Bollinger. He added standard deviation analysis to determine highs and lows. We have Dr. Jim McKeever. Again, he said investing needs to be done on buying power value and not on the basis of the value of any currency, especially the US dollar. It's always very critical of the US dollar and how it was managed. Well, I am too, but that's where I get it. And another Christian investor who is very similar to Jim McKeever is Don McIlvaney. He's a pretty old man now, but he always looked for the news behind the news. And he was one of the first to warn us not to trust the mainstream media. And boy, I don't know. I think I'm almost wanting to stop here. And
why don't you stop there? We're going to pick up in part 2, and you have as much time as you want at that time. Let me just say this, folks. We're not giving financial advice on here, but we're telling you about what we believe is one of the greatest opportunities for the church in the last days. I've been saying that for a very long time, since about late 2016, when someone on this program emailed me and said, I want to send you a couple dollars in Bitcoin. And I had remembered then that I had a Coinbase account I'd opened up while I was still in Vegas. This was probably 2015 or so. And I went in there and I realized I had bought $20 of Bitcoin and it was now worth like $70. And I said, whoa, that's a 3X. I was then prompted to go to Twitter. I saw a posting by the late John McAfee, who we had on this program one time before he died. And he said Bitcoin is getting ready to make a jump. It was at that point about $1,800. I said, this guy knows what he's talking about. You know, he created McAfee antivirus and sold it for $100 million and moved to Belize. I said, you know what, I'm going to look into this. I remembered the Netflix documentary I had seen called The Rise and Rise of Bitcoin. If you haven't seen it, check it out. It's on Amazon. YouTube right now. But I got excited about it. And I decided to go the route of becoming a miner. At one time, I had 5 mining rigs, about 29 GPU cards. I tried my hand at that. I even created a coin project and experimented with that. But looking back now over 4 years, I think the best method is just simply to trade, buy and sell, as Tom is talking about tonight, is going to continue talking about. I had a dream last year that Cardano was going to go to $1.51. And I began to alert my friends, you out there tuning in, to begin to look at some of these coins. Maybe dip your toes in the water. Everybody can set up a Coinbase account. put 25 bucks, 50, even 100, and play around with crypto. Do a trade. Download a wallet. Experiment with this. And if it's not for you, so be it. But at least you looked at it. Because I've never seen an opportunity like this in my lifetime where anybody in the world can get involved in this. And, when I said to people, Tom, that Cardano was a good buy at 10 cents, if they took the advice and they'd hung on to it till this week, they made a 27 to 28x profit on that coin alone. Because that coin right now today is number 3 in the world on CoinMarketCap, and it's worth $277. You would have literally made a 27x. Bitcoin at that time was about $2,000. We told people to buy it. You would have made a 25x today. It even went up higher than that. And I called some of my friends who have been gold and silver traders for years, and they laughed at me. They said, no, man, that's garbage. Well, I contacted a couple guys like that. I thought they would have at least listened to me, but they didn't. They mocked me. Well, they're not mocking now. And I contacted them several times.
Cardano right here. Do you still have that share screen on?
Yes, sir, right there.
Look at all the green. And the 23rd of August, it almost made $3.
One of many examples of where you can make money. And it's not too late to get involved in coins. Let me say this. When I shifted over into buying and selling, what did I actually benefit from it? I was able to pay off all my credit cards. I had quite a bit in debt that I had accrued in my move. I was able to buy a $10,000 car, just some basic transportation, and was able to put back a little bit for maybe a future purchase, and one day when I have enough to buy some land. And I did this bit by bit, stepping out in faith, whatever I could afford. It wasn't much at the time. Put a little bit into a coin, buy a little bit of this, buy a little bit of that. And you know what? It's not too late to get involved. Now the people that used to laugh at me, they act like, hey, they created the idea of getting into Bitcoin and crypto. I said, you forgot that I contacted you. Oh, well, they're true believers now. It's become obvious that there's nothing that can compete with crypto. Gold can't match it. Silver can't match it. And I'm out of time. But I want you to come back for part 2. And you say, well, dang, I wish I had got in when Bitcoin was $1. So do I. So do I.
We all did.
But I tell you what, I was talking to my younger brother, Damon, the other day, and I said, how are you doing, brother? He said, I'm good. We got on crypto, and he said, I went into Coinbase, and I have it set up to buy me $25 a week of Bitcoin. And he said, I've been doing this for about 2 years. I forget about it, and I go back in there, and my Bitcoin holdings just growing and growing. And I said, that's a great idea. So I did that myself. I went in yesterday, and I said, every week, Coinbase, buy me $25 worth of Bitcoin. It's not much. You could certainly do more or less if you want. You could do $5 a week. You could do whatever you can afford. And you know what? It's going to do it every week. $25. It would take me a long time to get a Bitcoin. But you know what? Bitcoin is being embraced by more and more, even nations. And they're not going to make more than 21 million of these. So if our beliefs hold true that crypto's here to stay and the price is only going to continue to skyrocket, I don't know of a greater investment that you can make right now. I'm talking financial, that is. Gold, it's nowhere. It's being manipulated. Silver, you need a pack mule to move it. Stock market, all manipulated through high-frequency trading. And you know what? You don't have to buy Bitcoin. Some people made $1 million buying Dogecoin. I thought the other day, I laughed at this other little coin, and then I got to go. It's called, hang on a minute, go over to here. It's called BitTorrent. Right now, it's 0.004 cents. That means 10, 100, you can, for $4, you can buy 1,000 BitTorrent. Well, about a year ago, 2 years ago, I had 1 million of it, and I thought this thing's never going to go anywhere. If I'd have held on to that, I would have had $4,000 for that little $50 or $100 that I put into it. You never know. Some of these are going to skyrocket. You can buy AMP right now for 6 cents. My point is, you don't have to buy a whole Bitcoin, cost you 50 grand. You can buy some of these coins for pennies. And you do your own research. We're going to give you some more research tonight to look at. But just get started. I mean, 10 minutes of a day in the Word. Get on an exercise bike and ride 1 kilometer, which is about half a mile. You can do that in a few minutes. Throw $25 a week on Bitcoin. Buy a bag of rice. I mean, we're investing in our spiritual man. We're investing in our body. We're putting back some food for hard times that are coming. And you're investing in your financial future. None of those steps are very difficult. I try to come up with programs that everybody can implement. You say, well, I want a whole Bitcoin. Hey, who doesn't? But big things start from small beginnings. Or you say, I got to lose a lot of weight. So do I. I began yesterday to get on that exercise bike, and I mark off a kilometer, do it a couple times a day, bit by bit. You're not in the Word like you need to? Get in it for 5 to 10 minutes a day. Make a plan. You're going to do it every day. Crucify that flesh. Get in the Word. Buy that bag of rice or a couple cans of tuna. Build your hard times stash now so you can help your family and others that may need it in the days ahead with food shortages coming. And finally, get out of the fiat system. It's going to crash. Inflation is going to overtake your money. You got to make the transition now. Be thinking ahead of the game. And with that, Tom, thank you for coming on. We'll see you in a few hours. God bless you.
In a couple hours, yes.
I'll be sending you a fresh Zoom link. God bless you, brother.
Shalom.
Shalom. Okay, let's save that. We'll be right back.